Hey guys, did you know that you can rent your house to your business and pay no tax on it? Have you guys heard this one before? Yeah, how about tax secrets that the wealthy use to pay no taxes? We've all heard this stuff on TikTok, and I get these from clients sometimes. I see them, and it's really starting to get to me. So let's dig into this one. This tax-free rental of your house. Sometimes it's called the Augusta Rule. Some people call it the Master's Rule. So what is it? Is it just a TikTok scam, or is this for real? Let's dig into the details. I've got a little presentation here I wanted to go over and check it out because this gets so much hype. I mean, people constantly are pushing this as a tax strategy that's going to zero out your taxes. It's this secret loophole that your CPA doesn't want to tell you about. Well, as a CPA, I kind of take that personal, so let's put some truth to this. Okay, so what is it? There is a code section 280A, and basically it says that if you have rental income less than 14 days out of the year, it's tax-free. Okay, so that's legit. It's really actually in the code, so that part of it is true. So the Augusta strategy, which actually came from, the Masters golf tournament, people there can rent their houses out for, the week or so of the tournament, and they pay no taxes on it. It was actually enacted back in 1976, led by some lobbying efforts to get this in. And so as long as you qualify for this portion of it, yeah, you pay no tax on that rental income, and that's great. And that does kind of sound like a little secret loophole in the tax code, but it's actually in the code. And that part of it, yes, is definitely legit. So what's the other side of it? Well, the other side of it is I have to have a business. So if I have some other business that's a separate entity, so say I have like an S-corp or partnership, and they can rent my home from me and pay me rent personally and deduct the rental expense, and then I personally don't pay tax on that income. And that's where the tax savings comes from, right? Because I get a deduction over here on this side, and I don't pick up the income personally on the other side. So this is where it gets tricky. As I said, we have to have an S-corp, a corporation, or a partnership. It cannot be like a self-rent. It can't be like myself as a sole proprietor, just renting from myself. That doesn't work. So there's actually was a court case about this not too long ago, back in 2023, the Sinopoli versus Commissioner. So this is one where these guys really maxed it out. They were claiming $290,000 in rental expenses on an S corporation, and they were claiming they were using it for board meetings and so forth in their personal residence. So the IRS came in and audited them. They disallowed it, and so they went to court. Unsurprisingly, the IRS or the court decided against them, and they said, look, $290,000 is ridiculous for, your personal residence. And they, looked up some comps, and they decided that $500 per meeting for 12 meetings was what they allowed. So guys, this is one where you try to save a bunch of money on taxes, you get too aggressive, and this ends up costing you a lot of money because not only do they have to take back the deductions, they have to pay the taxes, they have to pay the penalties and interest. You got to pay a CPA. Maybe you fired the one that got you into this mess, and they had to hire attorneys to try to fight it in court. I'm kind of surprised it went to court. Somebody should have told them from the beginning, hey, this is not a good idea. So let's look at how you could do this and do it right. This is all going to be hinging on substantiation. So documentation, right? We need a written rental agreement. We need an agreement between the entity, the S-corp, for example, and us personally, stating, hey, we're going to rent the house for these board meetings, business meetings, whatever. Fair market rate support. we've got to have some comps from a hotel or event center, maybe Airbnb. And that's where it gets tricky. So if you do this right, and let's say you're in an average, suburban home, I mean, $500 a day is probably going to be about as much as you can get. You might be able to push it if you're in a, higher end home or in a luxury kind of area, but that's about all you can get. So going back to the previous example, so just to put some money on this, like if you get a deduction for the year, so that's 500 times 12, right? $6,000 in deductions. What's this saving you in taxes? Well, if you're in the top 37% rate, it's saving you about $2,200 in taxes, right? And we've got to do all this work to make sure we're doing it right. We need to get the comps. We need a rental agreement, corporate authorization, meeting records. That's one of the biggest ones. Every time we have a meeting, we need to say what the meeting was about, who the attendees were. We need a memo to show that, hey, we actually really did have this meeting. Another problem I run into a lot is when I've, looked at this with clients, because they say, hey, this sounds great. Let's see if we can get some tax savings here. And they say, well, yeah, we can have a meeting once a month at the house, but what's going to happen in reality is like, well, maybe it's like an owner and maybe his wife helps him run the business, and they're going to say they're going to have a meeting, at this particular day. Well, what actually happens in the house? I mean, the kids are running around, you're trying to figure out what to get for dinner and so forth. And I mean, are you really having an actual meeting? I mean, most of the time, most people don't find this practical. Okay. So if you can't actually do it right, you just don't need to do it, Number 5 here, prove you need an actual payment. You can't just kind of do a journal entry in the books and say you paid the rent. Okay. That's not a big deal. And then a log of every day that you had these meetings and paid the rent. Okay. So that's how you would do this right. But like I said, most of the time when I've showed this to people and they go, hey, this is all the work that's going to be required. And yeah, it might save you like a couple $1,000s in taxes. Most of the people that I've talked to about this are not really that interested. So this is not some loophole that is going to zero out your taxes. It's not some secret the CPAs don't want to tell you about. It's really in the code. It's not appropriate for just blanket, just selling everybody this strategy so they can, not pay taxes. This is just not how it works. So, I hope that's helpful. I am a CPA. My name is Ben Lego. My firm is Lego CPA. This is my website, Lego CPA. If you want, check out my website, book a consultation, talk to me. We do tax planning, but we do tax planning a little differently. We offer flat rate services, so I'm not going to try to sell you a particular strategy. I'm not tied to any one. We do want you to pay the least amount of taxes legally possible, but we're not going to push anything, shady or aggressive on you. We're going to look at all the possible strategies and look at everything we can do to reduce your taxes. But we're going to do it the right way. We're going to do it with proper records and substantiation, so you don't end up, in tax court trying to fight and have a huge tax bill. All right, guys, appreciate it. I'll be posting some more of these because this has been a big deal all over TikTok with all these guys pushing all this stuff, and I just want to kind of spread the truth about it. Thanks, and see you next time.